Hello everyone, today I'm going to share about the key catalysts for Tesla stock and my price target for year 2022. Before I dive in deeper, I just wanted to take this opportunity to highlight that I see Tesla as a generational company. So what does this mean? It means this is a company that you may not see again in a generation time. It's phenomenal, and you may ask how phenomenal.
The 3 points, Manchester City are still alive here. Balotelli, Aguero! I swear you'll never see anything like this ever again. So watch it, drink it in.
Alright, you get it? It's so rare that if you miss the boat now, you may miss it forever, or you have to wait for another 20 to 30 years. Such generational company can potentially change how the world lives, so much so that it can define a generation. Just like how Apple took the mobile world by storm, and how Amazon transformed e-commerce and online shopping. Entering 2022, I feel Tesla looks set to be making a run to new highs again. With the various key catalysts and strong tailwinds, it is safe to say that 2022 could be Tesla's most exciting year yet. Watch on to find out more. The first key catalyst is Elon Musk is going to complete his stock sale. This is also the reason why I wanted to push out this video before 2022. For those who are not aware, on 6 November this year, Elon asked his 62.5 million Twitter followers to vote if he should sell 10% of his Tesla stock. And the Twitter community voted yes. After the poll, we actually realized that Elon had to exercise a large number of stock options based on his CEO compensation package by 2022, and this will create a big tax bill. Therefore, in a way, he has to sell some of his stock regardless of the Twitter poll to pay the taxes. And interestingly, most of his sales were pre-planned back in 14 September 2021. So maybe, just maybe, he already knew that the result will swing the way he wanted. Elon's sale and the recent market volatility have knocked more than 20% off the share price since it reached its all-time high. It is currently sitting at $1,000 each. Therefore, with the news that Elon Musk was done or almost done with his selling, some pressure was lifted off the stock price, especially when short sellers, profit takers, hedge funds started to close their short positions. With the pressure off and the recent bloodbath in the stock market, in other words the market pullback, I foresee the price will rise from this point onwards. Some may say this video could have come earlier, but I was observing how the stock reacted when it was testing the $900 support level last week, indicated by the blue line. Just to share, the stock is on the short-term downward trend, indicated by the red line, and hence I would like to see whether it will go further down to the next support level at 800 plus, which it didn't. The support zone of $900 to $910 held very nicely. At this point, I'd expect this downward trend to reverse, especially with the catalyst coming up as soon as January 2022. Also, when in doubt, zoom out. You will realize it is still on the long-term upwards trend indicated by the green line. I feel that this 10 to 20% discount stock price presents a very good buying opportunity for people who have been eyeing this stock and are waiting to enter. For those who have missed the last major dip earlier this year, do not miss this rare opportunity again. For existing holders, it's a good chance to load up your position too. Okay, let's be frank. We all know Tesla is not the largest automobile company in terms of revenue or sales volume. But, here's a but. Tesla's competitive advantage lies in the niche electric vehicle market. If you deep dive into this fast-growing market, you will notice Tesla currently sits on top of the rest and is in the leadership position in terms of sales volumes and revenue. This year alone, we have seen quite a few traditional automakers making announcements on how much they are going to invest in the EV market. For instance, General Motors has committed $35 billion through 2025 on EVs development and battery research, and plans to launch 30 new EVs globally. Likewise for Ford Motor, which has allocated $30 billion for its EV future, which includes the battery research as well. I see similarity in the case of the mobile phone world. Using back the same example, Apple changed and disrupted the whole mobile phone landscape when they first introduced their iPhone, and it forced many traditional phone makers to pivot and tweak their strategies. It was like suddenly everyone was playing a catch-up game with Apple. And I see that in Tesla and the EV industry now. As the world and countries move towards electric vehicles, traditional giants are racing to electrify their vehicles. No pun intended, by the way. To add on, Tesla's facilities were designed to build electric cars right from the start, but legacy automakers built their factories for internal combustion engines. So they will still need the time and money to recalibrate or adjust the existing infrastructure. Okay, I'm not sure how I can further emphasize this. Tesla is in a pole position for this multi-decade disruption opportunity, aka vehicle replacement cycle. At some point in time, 100% of the new car sales globally will be electric, and I cannot imagine how dominant Tesla would be by then. Just wanted to sum this catalyst up by saying that dominance of ICE vehicle market does not necessarily give them an advantage in the EV space. Just like dominance in the initial 2G phone market doesn't mean you will continue to dominate the 3G, 4G and 5G market. Look at Nokia and BlackBerry, and then you look at Apple and Samsung. You get the drift. Many legacy automakers and old guards will struggle. Tesla will report their Q4 deliveries on 2nd Jan 2022, which is a nice way to kickstart the new year. There have been speculations that the delivery numbers will exceed the estimates. If the delivery is strong, the stock should rally further leading up to its Q4 earnings call, which is around end Jan 2022. For info, Tesla's full-year guidance for delivery is about 750,000, and to date, they have already delivered 627,000 vehicles. So Tesla only needs to deliver about 122,000 vehicles or more in its fourth quarter to hit its full-year guidance. But the expected delivery is actually much higher, likely in the range of 250,000 to 270,000, which will then give Tesla close to 900,000 deliveries for the whole of 2021. And this should be seen as a good result. All in all, Tesla is set for a strong fourth quarter earnings report. And you may see Elon Musk returning to the earnings calls to provide significant updates to their product roadmap. There may be some announcement on Cybertruck or semi-truck delivery dates. To write on the previous catalyst on deliveries, 2022 is going to be a massive year for both production and deliveries. Most of us would know by now that after several delays, there are 2 new factories in Texas and Berlin coming up in the near term, as early as January 2022. Currently, Tesla has been exporting and shipping vehicles from their China factory to the Europe market. So with the Berlin factory up and running, Tesla can localize its European business, thus cutting down on shipping costs, delivery time, etc. On top of that, Tesla's Shanghai Gigafactory will also see an expansion of its manufacturing capacity. For information, even with supply chain constraints and chips shortage, Tesla continues to see more demand that it can handle. And that was the reason why the company spent billions of dollars to build factories in Europe, China, and the US. So with the 3 gigafactories, Tesla will be able to deliver a huge number of vehicles in 2022 and is on track to meet consumers' demand in the years to come. Personally, I feel when the demand for a company's product is so huge to a point that the company struggles to keep up, it's a good thing. Or to be more specific, it's a good thing if the company does something to meet the demand, just like what Tesla is doing right now. Another thing to highlight, other EV brands like Rivian and Lucid are getting started in the US. So just imagine if they want to expand to Germany where many giant automakers are, they will face similar delays, red tapes, etc. So this factory in Berlin really gives Tesla a huge competitive advantage, at least over those pure EV brands. Next up is the 4680 batteries. Tesla is looking to scale them in 2022. These battery cells are bigger, easier to produce and assemble, and will be incorporated into the vehicles. The main goal of the 4680 batteries is to drive down costs and increase efficiency, which will help increase Tesla's margin. The company believes that this will help them to deliver EVs for as little as 25,000. Personally, I feel that this battery technology is a strong moat, as Tesla has a decade head start over others. Reason being, Tesla knows what works for EV and what doesn't in the battery technology, and they will likely retain its lead in this segment for years to come. and whether the competitors catch up at some point in the future is up for debate, but that should be a number of years down the road. Moving on, it's the Cybertruck and Semi. The Tesla Semi-Truck and Cybertruck are both expected to start production in second half of 2022 after the ramp-up of Model Y in the two new factories in Berlin and Texas. Elon once said in an interview that the Cybertruck will be the best product ever and a very special product that only happens once in a while. A search on Tesla website shows that the vehicle is designed to have the utility of a truck with sports car performance, and it is built to be durable, versatile, capable and high performance. For info, this truck has exceeded 1 million pre-orders. As for the Tesla Semi, it is a heavy-duty all-electric Class 8 semi-truck. Similar to the Cybertruck, the production has been delayed a few times, but interestingly, a few big companies such as Pepsi and Walmart have indicated their interest. In fact, Pepsi has pre-ordered 100 from them and was expected to receive the first batch of 15 by this year 2021. Apparently, it got delayed again. Anyway, the point is, these two new vehicles will bring in more sales for Tesla, albeit not a lot when compared to their main fleet. Next, Tesla is more than just a company that produces electric vehicles. They are artificial intelligence and robotics company too. Apart from the EV and battery business, another Tesla's important yet most controversial product is its full self-driving FSD feature. Despite some setback in developing this product, the launch of the FSD beta has given owners a glimpse into what the future of driving could look like. If Tesla is able to pull this off by offering an affordable FSD system, the payoff will be massive. Next, do you know that their supercharger network also brings in revenue for the company? To make things better, Tesla is opening its supercharger network to non-Tesla's vehicles. The current annual revenue from charging stations is less than $1 billion, but analysts estimate that this revenue could hit $25 billion annually over the long term. Alright, the last key catalyst is the credit rating. In October 2021, S&P Global Ratings boosted Tesla's credit rating to BB+. This boost was because Tesla has lots of free cash flow and very little debt. S&P says it could consider an upgrade to an investment grade rating on Tesla in future. For info, the next grade, which is BBB-, is an investment grade. Okay, that sums up the key catalysts of 2022. However, the list is not exhaustive. If you were to research deeper, you will realize there are more catalysts. But here's another but. Despite the various catalysts, there are a few downsides to buying Tesla stock which I thought I should also highlight. First up, if you are in for this journey, do be informed that it will be a bumpy ride. Meaning to say, the stock is very volatile. It can go up 10-20% anytime. Next, the company is facing more competition than ever before, and there will be lots of noise in the market. But if you're bullish about Tesla, you trust their moat and their competitive advantage, then this should not worry you too much. Last but not least, Tesla is headed by an eccentric boss. Elon Musk loves to make his opinions known on Twitter, and his tweets have caused the stock price to plummet a few times already. But this does not concern me as I see it as a buying opportunity. Personally, I like him being a visionary leader. It's like Tony Stark in Iron Man movie. 2022 is shaping up to be a terrific year for all EV manufacturers, especially for Tesla as it has strong tailwinds entering the new year and has a very good chance of exceeding expectations over the next few quarters. And just like Apple in the mobile phone market, Tesla is a niche brand and has a really devoted following in the EV market. On whether Tesla stock is too expensive, I don't think so, as there are too many catalysts coming up in the near and long-term future, and I believe the price will continue to rise. To add on, I personally feel that traditional valuation techniques may not be very relevant to Tesla at this point, similarly to how Amazon was always too expensive by traditional valuation technique as it rapidly became one of the Earth's largest companies. Okay, here's my price target for Tesla in 2022, which is $1,500. And that's about 40% to 50% upside if you have bought the dips recently. Even if you have not, it's still not too late to buy now. Come Christmas 2022, a year from now, you will realize the current $1,100 Tesla stock was actually a bargain. 2022 is going to be a bigger year than 2021. For me, I feel that the Tesla story is just getting started. So, what do you think of Tesla? Did you buy the dip recently? Let me know in the comments section below. We'll love to hear your views. Thanks for watching my video. I will continue to cover more stocks and topics in future. Hope you can like, share and subscribe to my channel to show some support. Thank you.